certainly it's very important to all businesses, including RBC, and we talk a lot about the growing skill set gap and the need for businesses and government and secondary and post-secondary institutions to work together to really talk about how do we direct students, how do we train students, how do we make sure we have the right skills for Canada to be competitive in the future. Competitiveness is a big issue for our country. And for me, it's very personal. I grew up in a small business family in Montreal, middle-class family. I went to the University of Waterloo because I had a co-op program, and that co-op program for me was the great democratizer. It gave me access to a role at RBC. I didn't know anybody in this company, I had no connections. I applied for a programming job, a coding job, and I got that job. And it was my chance to see RBC and to see the company, but it was also my chance to see the field of technology and programming. I was a computer science student at Waterloo. What I found is I loved RBC. I loved the people, I loved the culture. I didn't necessarily love a career in coding. And for me, I pivoted very quickly in my second, third, and fourth work terms to work in the branches and to work with customers. So what work integrated learning did for me in preparing me is it allowed me access to a role within a big company where I had no connections, allowed me to see how my career might evolve in the discipline I had gone to school. And if I hadn't made that pivot, I would have spent 4 years getting a degree, I would have looked for a job, I would have found out 2 years later, maybe at 25, 26 years old, I really didn't like this career. At 19 years old, I made that pivot to the business side within a company I love, and I continue to work with 33 years later. So work integrated learning for me was transformational and allowed me to get a better return on my effort and financial funding of myself. The government helps fund me. So that return was there. For RBC, they got to take a look at me and see if I was a candidate that they wanted to bring in full time. I got access to my peer groups within the University of Waterloo, and they hired many of them. So work integrated learning is this capability that we need to build in our country that allows students access to the roles, allows them to see what type of skills are needed in a company, and allows businesses to see what skills students are bringing. We can bridge this gap through programs like this. So for RBC, it's been foundational, we think, to our country's success and to our success, which brings us back to kind of the Business Higher Education Roundtable and what we're trying to do at the national level. And today's announcement, around $17 million in funding for work integrated learning in our country, helping create, in the short term, 44,000 net new co-op and internships for Canadian post-secondary students, with a long-term goal of 150,000 net new placements, because it's so foundational to the skill set gap that we need to close, helping Canadian competitiveness and helping businesses find that talent. So it really is important for me because I started there, important to our country, and important to RBC.
The skill set gap, I think a lot of people, the part of the anxiety about the future of work is they hear coding. Interesting that you had a background in coding. They think the future is all coding. If I can't code, I'm lost. Obviously, there's going to be more jobs than just knowing how to program a computer.
Yeah, there's a whole range, and I go back to our report on Humans Wanted and the skill sets that we need in empathy, complex problem solving, dealing with people, design. Coding and working with technology is going to be important for every career and every function in our society. There's not going to be a part of our world that's not interacting with technology. So it's about interacting with it and leveraging it as a tool and not being afraid of technology in itself. It's going to change jobs, and this is a journey we're on. And we need to reskill a big part of our population. We need to make sure, as I just said, that new students coming through are skilled properly so they don't have to be reskilled early in their careers. But it's not something to be afraid of. We've got these incredible skills. We think we're going to create more jobs in the future, not less jobs. They're just going to be different jobs. So what we have to do as business and government leaders, and it's part of today's announcement again, is to make sure we understand what those jobs look like and we get people ready through skilling and reskilling of our workforce.
What does that look like then, the future of work, when it comes to economic growth in Canada? Obviously, things got rattled up in a big way 10 years ago in the Great Financial Crisis, and growth, it's been there, but it hasn't been stellar. As we see the automation of industries, including banking, algorithms taking over tasks that humans used to, what does that do to the overall economic growth of Canada and the prosperity?
I think Canada's prosperity comes from our competitiveness and our global competitiveness. And I think we have to constantly challenge ourselves to say, how competitive are we with our policies, with our tax structure, with sufficient investment, with the ambition of our businesses? And there's work to do. I think we have to be honest with ourselves, particularly on Canadians' global competitiveness. We've got regulatory frameworks at the municipal, provincial, federal level that slow us down. And we get that feedback from foreign investors. They look at Canada and say, this takes too long to get things done, whether it's in manufacturing, in real estate and development. Obviously, we've talked about pipelines and large infrastructure programs, making decisions and getting it done. Foreign capital is impatient, and it's looking for a home where it can get stuff done, and we're slow.
How do we get past that? Because I think you'll hear the politicians and they'll say, we understand competitiveness, we want to get competitive, but it feels like we keep having the conversation over and over and over again, and we're not changing the way we're doing things in Canada.
We are changing, but not at the speed of change around us. So we are trying to address these things at the municipal, provincial, federal level. It's not one level of government. Businesses continue to advocate, businesses have to be ambitious, but the speed of change around us, it's striking. When I talk to business leaders, whether it's at Davos or around the world, the speed of change around data, around AI, around robotics, around investment flows, it's fast. And Canada has to be very cognizant of the speed of change around us and not just be kind of myopic to our own country. The other threat to Canada is we, as a small nation, we really rely on multilateral trade agreements. It's been our strength to negotiate multilateral, with NAFTA being one of them. The world is moving closer and closer to bilateral trade agreements. As the larger trade nations look to leverage their economic power into bilaterals, that's a threat for Canada. So we talk about competitiveness of policy, of trade, of infrastructure, of capital flow. We need to be conscious of these macro global factors. I mean, the IMF just downgraded global growth from 3.5 to 3.2%. It's the third consecutive downgrading based on global trade friction, moving towards these bilateral agreements and less flow globally, than for less investment globally and less opportunity for growth. And Canada is not immune from that.
The fact that we are a small nation, obviously we get caught in the middle of things. We're caught in the middle right now of the United States and China. This seems like to be a very tough one for policymakers as well. What is Canada's role, and how do we tread so we don't make things worse for ourselves?
I think Canada has to continue to maintain our multilateral trade agreements, whether that's USMCA, and get those approved and through with the changes that we've negotiated. We have to continue to look for new markets for our products. We have to continue to try to build super cluster capability, whether it's being one of the largest plant-based protein suppliers to the world, or a major energy supplier to the world. We have to look at these markets, and we have to get our infrastructure built to do that, getting our product to market. You look at the challenge in getting some of our lentils to market with all the oil that's sitting on rail cars right now. We're squeezing out. That oil should be in a pipeline. And that grain and those lentils should be on those cars to foreign markets. So we have to get our product to market, and we have to look to new markets as Canadians. And I think that's really important for a long-term kind of export capability and investment in our country.
Closer to the bank, there's something that you said, it was a while ago, several conversations back, that's always stuck with me about how technology is changing everything, including the banking experience. And I just saw this piece the other day. It was either Amazon or Google offering people incentives to shop for homes online. And I remember when you told me that you're concerned about the banks being cut out of that action, that if someone sits in front of a browser, searches for a home, before they even have a chance to come into RBC, their bank, and inquire about a mortgage, someone else swoops in with a mortgage product. How do you fight that kind of technological change and make sure RBC doesn't get left behind?
It's been a part of the strategies that we've articulated. If we can just continue to be a better digital version of who we are today and wait for the customer to come to us, it's not a field of dreams. You have to go out and find the customer at the moment of truth. And in a physical world, our strategy worked for 150 years. We celebrate our 150th anniversary this year in June. In the future, you have to, in a digital world, you have to find the customer. You have to be digitally relevant to that customer, which means expanding your value proposition and performing services and value-added services for a consumer, whether it's helping them find a home, helping them move, helping them sell a home, obviously financing the home. Same thing with a car and mobility. And we're redefining the businesses we're in, trying to create more value for customers, and therefore not allowing someone who is at the front end of a customer purchase experience to gain the insight and act on that signal. That we have to be integrated into our customers' lives so we can be relevant and create value. So our ventures that we've launched, our entire strategy is built around creating more value for customers. And we've got 16 ventures in market, including Ojo, which is a new home search capability, through images and through AI, trying to find an MLS, the home that fits your visual image. It's an exciting technology. We do the same thing with Drive in the auto industry. We're doing the same thing with small business. We've just launched Amply into the with 40 partners into the loyalty space. So trying to create value and stay connected to Canadians in a very different way. It's an exciting journey, and that allows us to be relevant and to compete with traditional and non-traditional competitors, as you referenced.
How do you feel about the housing market now that we've been through what we've been through? We saw the big cool down after the frenzy of the past couple of years ago. Do you think it's a healthy place right now?
Yeah, we continue to monitor all the supply and demand signals coming out of the housing market by market. And I would characterize us still in well-balanced territory between the supply of homes going for sale, demand for homes, the number of days they're being listed before they're sold, number of units being created. We do expect housing stock investment to slow over the coming year, and there'll be a little bit less creation in the condo and single-family home market, responding to potentially slower demand. The housing price resale market corrections are generally healthy. You wouldn't want to see some markets cool a lot more than they have. But we needed to slow this down through policy. And I think
I want to ask you about policy. Because B20, we're coming up on an election, and you're hearing the industry say the mortgage stress test, we need to ease up on the mortgage stress test. In your view, has it done the job that it needed to do and it should stay in place?
It's generally good policy. When we didn't have the monetary policy to slow that down, we needed to look at prudent regulatory policy. And I think vetting consumers for a higher interest rate environment was prudent. It's taken a number of buyers out of the market temporarily as they build a greater down payment for that mortgage. It's cooled housing prices, and the policies that have managed some of the foreign demand for product coming in. So it's all about balancing supply demand. But like every policy, it's not static. And at the time, with the heated markets and the growth and the amount of foreign capital coming in, competing with domestic capital for residential housing stock, it was prudent. As things slow down, maybe you have to relook at parts of it and tweak it. But from a structural perspective, it's prudent regulatory policy, and structurally is not off. It's strong.
The natural place to tweak it, at least what I hear from people in the industry, is the 200 basis points. They just say it's arbitrary, and that's the simple lever to pull. Does that sound reasonable, logical?
No, it's not arbitrary. I mean, thought obviously went into what is a relatively prudent stress of an interest payment, but you have to put into the context of where markets are. And those are the things that you could look at, whether it's a sufficient or potentially too stringent given where absolute rates are. But 200 basis points in the context of long-term rates is not a significant step up in rates. So I would say, it may be off a bit, but structurally, it's a strong buffer to make sure we have healthy markets going forward.